those 5 American companies that make all of our weapon systems are American. Great. One step removed, most of the companies that they work with to make those weapon systems are also American. And you'd say, great. But one step removed, if you look at where all of the key inputs to all of this stuff that we use to keep ourselves safe and to protect our allies and to have influence in the world, all of that stuff can be shut off by China in a snap of a finger.
After a long time of chaos and instability, the Bitcoin market may finally have a way to get things straightened out. It all depends on a key insight from venture capitalist Chamath Palihapitiya. A number that changes everything in his analysis is $750 billion. Palihapitiya says that this number is not just a financial goal, but a paradigm shift. For many years, Wall Street thought that $250 billion was the important level. However, this amount was too small to keep the unstable crypto world stable. This mistake added to the ongoing uncertainty, caused wild market swings, and didn't give policymakers or investors a clear path forward. But Palihapitiya says the real turning point is much higher, at $750 billion, which he says can completely change both fiscal policy and the way the market works. Not only would reaching this level stabilize Bitcoin, but it could also completely change the course of American economic history by making it possible to make big policy changes, like getting rid of income taxes for millions of people. He thinks that if this goal is reached, policymakers will be able to better control Bitcoin's volatility, make more accurate long-term predictions, and create an economy that can be trusted. This change would also make institutional investors think again about old financial models and replace them with ones that are more in line with the latest trends in digital assets. Palihapitiya's NC $750 billion threshold ends up being more than just a number. It becomes a key part of a plan for a stable, safe, and bright financial future in both crypto and traditional markets.
Do not underestimate the absolute gargantuan largesse and kick-assedness of America. Like, it's easy to slag it, but this is a first among equals country on every dimension, culturally, artistically, economically, militarily, and we take it for granted. And so when you think about Apple, for their bottom line and their P&L, would they love to have maybe, an easier time to sell phones all around the world? Sure. But it's much more valuable for Apple to make the phones in China for as little as possible and get them to the United States, where they can sell 50 million of them every year.
That's right. Mm-hmm. You sell 50 million phones here, you're not worried about selling 10,000 in El Salvador.
Yeah, or if you look at the amount of iPhones sold in India, that's 1.2 billion people. You would think to yourself, hey, hold on a second, let's just go and focus. India can't drive the consumption to support a $3 trillion economy like the United States can. So this is the key insight. America is the country. American consumers, the 5 of us, okay, the 330 million of us, we create more downstream value for all these companies in all of these countries, in all of these stock markets. And then the question is, well, what is fair if you actually look at it that way? And I think what Trump has wanted to do for a very long time is just make things more fair. And his perspective is, why don't we just make things more proportional? Now, he uses the word, or not he, but I think the chart and all of this stuff, they use the word reciprocal, you tax me X, I tax you Y. I think that was actually the wrong word. I think the right word is more proportional, meaning if you're a country that's taxing our ability to do business in your country, we should have a proportional tax that tries to level that to a reasonable point. But the reality is that it's much more important for them. And I think that what Trump has started is a process of getting the 80 or 90 most, vibrant trading countries to realize this. that they've had the best of it for 25 years. I think he's also trying to recognize that there's a small sliver of people that have over-benefited, meaning like these globalist corporations, the people that own those corporations, at the sake of a lot of Americans. So let's just say, 5 or 10 million Americans absolutely crushed it over the last 25 years with globalism and trade. But that still leaves 325 million Americans that haven't. And so you have to right this ship. That's one. The second thing, though, is you saw this in COVID. America is totally unprepared to fend for herself if push came to shove. We can't make things here anymore, right? We have kids that can make TikToks, but we don't have scientists that can make drugs. That's not sustainable. That's not a secure country. Like if you look at our military programs, right? We spend, I think, $700 billion a year. Those 5 American companies that make all of our weapon systems are American. Great. One step removed, most of the companies that they work with to make those weapon systems are also American. And you say, great. But one step removed, if you look at where all of the key inputs to all of this stuff that we use to keep ourselves safe and to protect our allies and to have influence in the world, all of that stuff can be shut off by China in a snap of a finger.
With a national debt of about $35 trillion, or nearly 70% of GDP, the United States is in a fiscal crisis. Beginning in 1913, when the United States completely embraced debt financing and gave up tariff-based revenue, structural changes led to this debt. Federal fiscal policy is under pressure to service this debt, which has interest rates ranging from 5% to 6%. The United States is more susceptible to external pressures than Japan because of its heavy reliance on foreign creditors, including multinational corporations and geopolitical rivals like China. The federal government needs to address these issues before bond markets and interest rates dictate harsher realities, as the government has approximately $6 trillion in debt maturing in 2025. This is a national economic sustainability issue that extends beyond balance sheets. Complicating matters are recent administration's disparate economic strategies. While former President Trump's tariffs lowered interest rates and saved billions in debt servicing costs, President Biden's short-term debt management has left the country facing a refinancing challenge worth approximately $6 trillion. But this argument draws attention to a larger economic gap. Because half of Americans lack equity and wealth from Wall Street, they are more susceptible to the long-term harm caused by inflation than to the short-term price shocks caused by tariffs. They consider decisions made by Washington to be immediate and concrete. The government could remove federal income taxes for households making less than $150,000 during the crisis by raising an additional approximately $750 billion through tariffs or other economic measures. Americans in the middle and working classes would change if there was a drastic change in fiscal philosophy. This is not merely a policy argument. It is a fundamental rethinking of how the United States finances its government, deals with inequality, and steers its economic future. Every American home is impacted, and the choices made today will have a long-term impact on the country's financial situation.
We need to electrify as much of the United States as possible. Okay? Meaning we need more electricity, not less. We barely have enough electricity for all of the needs that we have. Okay? Fair?
Yep.
There's brownouts, there's all these, there's all these, it's all nuts. Okay? We need more energy. Okay. One of the things that we need more energy for is electric cars. I'll just use that as an example. Electric cars need an electric motor. So far, so good. All of that stuff can be American. But inside the electric motor, the way that the electric motor works is that there's a magnet that spins really quickly. That magnet is made from something called rare earths. There is nobody right now that can really secure a meaningful pipeline to those rare earths except through the Chinese. They're incredibly good at it. They're incredibly sophisticated. And they have a top-down way of organizing that market. That's an example. Let's say that you need batteries, not like the simple Duracell that you buy at Target, but like the big batteries that can store energy when it's made or whatever. There are two companies that know how to do this at scale. They're both Chinese. And you can go on and on down the line. In every critical market where America needs to be able to take care of itself, right, under all weather conditions, we have become very fragile. So tariffs have this dual-pronged impact. Prong number one is it starts to realign the world order. But prong number two is that it allows us to start taking back control of a lot of these markets so that we do the hard work so that we can rely on ourselves. Otherwise, if something bad were to happen, there's like a lot of really bad outcomes here where we cannot fend for ourselves. We can't make the vaccines we need, okay? We can't make the technological equipment we need. We can't make the computers we need. We can't make the chips we need. I think the way they did it was very clever. They made one mistake, which is in language, which is they put the word reciprocal, and they should have put the word proportional. Mm-hmm. So, you know, Akash, if I sell you $1,
yeah,
and you send to me $5, mm-hmm. the right way to think about what a tax would be, well, there's a $4 differential, so let's make it proportional to how much I'm giving you and you're giving me. The formulas that they used were proportional formulas. It got caught up in all of this like English language semantic nonsense.
Got it. Okay.
And then people who wanted to run with that tried to exploit the word and try to create confusion. But, you know, the simple way to think about it is if I'm here and you're here, the whole goal of the tariff is to just do this. Make it proportional. Right. Make these things proportional. That's the math. That math does work. Well, how does a trade deficit work? So, for example, like let's just say between the United States and China, they send us $10 of goods. We send them $1 of goods. That's a $9 deficit, right? We're bringing in more than we send out. Mm-hmm. Okay. So there's an entire economy of Chinese companies that get supported with the $10 of money that we give them. There's only $1 that benefits American companies. That's a trade imbalance. It creates a deficit. Now, by the way, it's not that a deficit is bad. Okay. Sometimes you want a deficit. Sometimes you want a surplus, but you want to be able to pick and choose where you want to be at any time with any country, right? That would make sense. That's like, hey man, I'm not going to just take this at face value. I'm going to evaluate the conditions and I'm just going to tweak the knobs every now and then to make sure that I know where I'm at. Some countries may be so strategically important. We're like, you know what? We're going to run deficits with you. That's cool. You guys build up some stuff, but on the back end, let's talk about some other deals we could do. Give us some critical things that we need. And we're cool running a deficit. Some other countries where maybe we don't get as much from them as we have historically or we should run a surplus. But let me just make sure that you guys also know one other thing about these last couple of days. A lot of people started to try to make a meme out of like, oh, look, this country's only got penguins, and that country only, is in the middle of nowhere. Here's a really important thing to understand what has happened over the last 25 years. Every single time anybody has tried to fix these imbalances, what companies were able to do was just to go to a different country that wasn't affected and basically mule their way into America. Okay.
So after March's Consumer Price Index, CPI, rose 2.4% instead of 2.6% as expected, Bitcoin and Ethereum rallied. Digital asset markets were optimistic after this unexpected inflation drop suggested monetary policy ease. Former President Trump's 90-day tariff hike postponement reduced geopolitical tension and boosted crypto prices. The continued enforcement of steep 125% tariffs on Chinese imports has kept markets on edge, highlighting a deeper uncertainty investors can't ignore. This complicated relationship between easing inflation and trade friction is changing the cryptocurrency investment narrative. Venture capitalist Chamath Palihapitiya's warnings about America's long-term fiscal imbalances and volatile tariff strategies are reaching investors seeking alternatives to traditional financial assets. Crypto markets are also boosted by institutional milestones like the SEC's Ethereum ETF approval, which followed Bitcoin ETF approval. Even though other parts of the crypto industry are still heavily regulated, these approvals show that mainstream finance is increasingly accepting crypto. Although Bitcoin has shown its ability to attract capital during macroeconomic volatility, analysts warn that this momentum could be deceptive and lead to a bull trap if trade tensions escalate. Still, Bitcoin's resilience, especially compared to traditional markets' choppier performance, suggests digital assets are moving beyond speculation. They are now seen as high-risk bets and inflation and global uncertainty hedges. Gold-backed crypto tokens have outperformed, indicating investors' desire for hybrid safety assets amid economic shifts. Changing U.S. Treasury yields reflect the conflict between disinflationary optimism and policy-induced market shocks. Crypto is a focal point for macroeconomic recalibration as investors reassess their strategies in light of inflation, trade policy, and fiscal sustainability in this rapidly changing environment. Political posturing and policy innovation blur as discussions focus on bold proposals like eliminating income taxes for Americans earning under $150,000, potentially funded by new revenue sources like tariffs. Digital assets are now central to modern economic discourse, but whether such a move is feasible or campaign rhetoric is unclear.